Welcome to our exploration of CSE Global, a company once considered a dark horse, now potentially turning into a multi-year success story. Before we proceed, it's crucial to understand the disclaimer and AI disclosure. This presentation is for informational purposes only and not financial advice. Always conduct your own research and consult professionals for investment decisions. Personally, I have been holding CSE for 7 years with average cost of about 30 cents. For the longest time, it was just stuck in a range, but around 2025 May, it broke out of its long-term resistance of around 44 cents, and has since been up and away. There seemed to be no particular news then, probably insiders or smart money running ahead. In 2026, with data centers themes still in play for the coming few years, I expect it to be one of the better performing stock in SGX, if not the top 10, as the multi-year story is just developing. This is because AI as a strategic theme for the Mag 7, especially MSFT and GUG, is going to get more entrenched, as it represents the next big phase in growth. Thus, even if there is an economic downturn, investments in AI data centers may be reduced but would not be stopped, as it is a key competitive factor in the future. In other words, Mag 7 are betting the farm on AI. CSE's near-term earnings can be impacted by stated upfront cost loading, but that is a sign of strength of future demand, not of weakening demand, allowing better earnings scaling thereafter. It has been a frequent mention in Singapore stock alpha picks for many years. I am sure covering analysts was also frustrated for the longest time. Looking back, I have been married to it for 7 years already. There is no itch to sell, probably going to hold for another 7 years. At my cost price, it can be an expected 10x or more in the next few years. On the first trading day of 2026, CSE made a notable appearance in the top volume table. Could it be a sign? I saw, but you decide. CSE currently is around 2% yield, with a payout policy of 50% minimum. Recent dividend cut is to allow reinvestment. It has shown improved operating leverage. P/E ratio is high at around 25. Full-year results soon in February. Recent developments have seen CSE securing significant contracts, including a major deal with Amazon. These wins are setting the stage for future growth and establishing CSE as a preferred partner. The monthly chart reveals a bullish trend for CSE, with consistent growth since May 2025. Note that it has a monthly white candle since breaking out in May 2025, with high average volume. Analyzing the daily chart, CSE's price closed above a key psychological level of $1 with steepening trendlines. With CSE reaching its first target price, many are advocating taking profits. While the stock shows potential for further growth, it can be wise to consider securing some gains at this stage. The partnership between CSE and Amazon marks a significant milestone. CSE is the first ever SGX company that Amazon has invested in, confirming CSE as a key preferred system integrator for their data centers. Conversely, this implies a lack of suppliers in this space, with Amazon trying to secure suppliers. However, CSE is not in a lock-in structure, and is reported to be in the midst of qualification with other cloud providers. The data center story began back in 2019, when CSE Global subsidiary in the US, CSEW Industries, acquired Volta. Its engagement with Amazon began around 2021 with initial design work. Later, due to CSE's inputs, their contribution amazed Amazon that much that the rest is now history. Consequently, Amazon now has a financial alignment with CSE, warrants that vest as CSE earns revenue from AWS orders. The vesting of warrants is conditional upon Amazon fulfilling its $1.5 billion order target over the next 5 years, implying a run rate of $300 million per year. This is a strategic partnership as most electrification suppliers don't have such equity-linked arrangements. Next, it is possible that $1.5 billion is the floor, and not the roof. Valued at an average of 400 million Singapore dollars a year, Amazon's order quantum is going to be significant, representing about 46% of FY 2024's total revenue of $861 million. Currently, the company is front-loading expenses for new staff and facilities to meet future demand, with significant capacity expansion planned in the U.S., in anticipation for upcoming large-scale contracts. AB, Schneider, Eaton are competitors, and also partners. They are the winners for in-house components, whereas CSE wins by delivering integrated solutions, not just bare hardware. AWS needs fast, modular, repeatable build cycles, and this is where CSE fits into this perfectly, with their prefabricated electrical houses. The hyperscaler segment is key for CSE's current growth, but it is not its only leg. CSE can grow both vertically, via deeper solutions, etc., and horizontally, ASEAN, other segments, etc. CSE faces both opportunities and risks. While benefiting from hyperscaler expansion and AWS credibility, it must navigate challenges like competition and project flow to sustain its growth. This slide shows current Broker's Call. A historical snapshot of Broker's Call can give a comparative historical view of its corporate health and evolution. CSE's recent contract wins have been landmark achievements, securing its position as a leading player. This timeline gives a visualization of the speed and scale. So far, revisiting CSE after 7 years of cold storage, I find that I still have warm feelings, and have vowed to stay together for more years. In my current view, amongst all the stocks in SGX that I know, CSE probably has one of the highest visibility to become a multi-year, multi-bagger story, amongst its market cap peers. This story is, really, just beginning because it has deep competency in a space that is in high demand now. It is also a less risky way to get exposure to the AI, DC, electrification theme. Also, it is likely that $1.5 billion is the floor, and not the roof. Even in a downturn, AI, DC build-out may be reduced but will not stop, simply because the Mag 7 is betting the farm on it, for their next leap of growth. The close above $1 is technically bullish, maybe indicating a gallop towards the upcoming results around February.